You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Coffee with Cott, where advisors can find out what is brewing in the options space with your host, OIC's Director of Education, Eric Cott. OCC was created in 1973, and OIC is an industry resource supported by OCC to provide trustworthy education about the benefits and risks of exchange-listed options. Since 1992, OIC has been dedicated to increasing the awareness, knowledge, and responsible use of options by individual investors, financial advisors, and institutional managers. Before we get started with this show, investors should know that options involve risk and are not suitable for all investors. You should never enter into an options transaction until you have read and understood the risk disclosure document, characteristics and risks of standardized options. This brochure is available by visiting www.optionseducation.org or by calling 1-888-OPTIONS. OIC makes no recommendation with respect to any financial firm. OIC does not make any warranty as to the accuracy, usefulness, timeliness, or the continued availability or existence of information created or maintained by others. Opinions and strategies expressed by others are not necessarily those of OIC, nor does OIC endorse, warrant, or guarantee products, services, or information described or offered by such firms. Commissions, fees, margin interest, and taxes have not been included in any of the examples used in this show. These costs impact the outcome of all stock and options transactions. Consult your tax advisor about any potential consequences. None of the information presented in this show should be construed as recommendation to buy or sell a security or to provide investment advice.
Welcome, everyone. I am your barista for this program. So glad you can join us. Please go ahead and fill up your cups with a hot beverage of your choice. Whether you're cold brew, double espresso, mocha, cappuccino, grande type, we have you covered. On this show, we pour over topics that relate to your practice, your clients, and options. Welcome, everyone, to the Percolating Podcast. I am, of course, your head barista, Eric Cott, serving up today a really interesting show with a blend of NCAA March Madness, some new terminology, and topping it all off with ideas on how practitioners can get started or reintroduce options into their practices. We have a trifecta of brain power here today, and of course I'm including, myself in this group, but it's a true education themed segment. I'm about to introduce my two guests who coincidentally made it easy on my brain, to remember, since their first names have, only one letter in front that differs. We have Devin Eckberg and Kevin Davitt here, and my listeners and coffee compadres who are out there, they kind of know my role as Director of Advisor Education for the OIC, the Option Industry Council. And that's why it's so refreshing to have these gentlemen today. So I'm going to start off to the west. Devin Eckberg, Chief Learning Officer at IWI. Devin, welcome, and please share with our listeners the scoop about what you do, who and what is the IWI. I mean, there's so many acronyms out there. Explain this trendy terminology, pracrademic, if I'm pronouncing it right. And I'm very challenged and really want to know about that. And lastly, what happened to your Creighton Blue Jays basketball team, in the NITs, because that might be the most important thing. So, Devin, go right ahead.
Yeah, cool. Thanks, Eric. I appreciate it. So just the name of my organization is Investments and Wealth Institute. You can call it IWI. I just ask you not to call it IWI like some people do. So IWI is perfect. We've actually been around for a long time. We're formerly known as IMCA, the Investment Management Consultants Association. And we're probably best known for the certifications that we administer. So we administer the CIMA, the CPWA, and we just acquired a new credential about a year ago called the RMA. So we're a professional association. That's mostly what we do as a standards body, but we're also an education provider. So that's where the word pracademic comes from, is kind of our philosophy, our approach to education, which is academic. So we work with the top 20 business schools like University of Chicago, Wharton School of Business, Yale, and others. But we also insist on making that education as practical as we can. So it's practical and academic, and that's where we came up with a term for pracademic. Not to throw a coffee pun in there, but it's sort of the perfect blend, right?
Oh, I do like that, actually. And do you have the coined or copyright to that pracademic? Because I might have to use that out in the field. I really love that kind of blend of the two terms. And it really does, Devin, knowing you for a long, long time, it does actually really kind of add a good flavor to what you do. So I appreciate that. And, our next guest is, of course, a friend from the Windy City. I welcome Kevin Davitt, who is senior staffer instructor. I'm going to get this correct. Senior staffer instructor at SIBO Global Markets. And Kevin, I won't harp on your Marquette Golden Eagles since, both your men's and your women's squads did better, made it further in the tourney than my Wisconsin Badgers. So, what is the scoop about your role at the Exchange, how you got into this education side? And I guess lastly, do you have this super cool terminology title like Devin? Maybe out in Chicago they call you the Derivatives Dynamo. Is that possible?
Wow. I'm going to have to work on introducing that as soon as possible. First things first, my Marquette Warriors, I'm old enough to remember the Warriors. I went there when they became politically correct and the Golden Eagles. But they deserve your ridicule, and both Marquette and Wisconsin bowed out in the first round. So there is nothing too exciting there. Very poor end of the season, but Sweet 16 awaits. Now, to your point on how I ended up in this business, I do not have a super fancy portmanteau like Devin does. I'm going to have to work on that. Perhaps Derivatives Dynamo, little bit self-involved for me, but we'll work on it. I started in this business and have seen the shift over the past 20 years. I started as a clerk on the floor here at back when it was CBOE, now SIBO Global Markets. And not too long after that, I became a member of the Exchange, a market maker, and I traded here and on the PHLX out on the East Coast for a bit for some large market making operations. One was sold to TD years ago. And in recent years, I've traded commodity futures and options. And for the past 3.5, I have enjoyed my role here as an educator, somebody that advocates for and understanding the broad utility and flexibility as far as options are concerned, and whenever possible, advance the use of the handful of products like index options and VIX and the suite of associated products that trade on our exchange.
Fantastic. And again, we're going to kind of touch on this a little bit later because there is some collaboration or there's some overlap between this TD Ameritrade discussion and such. So we'll come back to that. But I'm going to stay with you, Kevin, and ask you, understanding this preparation, the keys that advisors, FAs or RIAs, sort of launching into using options. I'm looking maybe for you because I know you travel a lot. You're in front of a lot of advisors. You and I have been at programs together, and some of the things that, your exchange might offer. But, if you were in these folks' seats, and relative to beginning this sort of preparation, look, when you're starting with options, I guess, a couple things that come into mind. You got to have, some goals in mind in terms of, say, what you're looking to accomplish. I'll use the comparison with the NCAA. You got to have a game plan, right? You got to have some sort of roadmap on what what are going to be your outcomes. That we do know that options give you choices, but there's a lot of jargon out there, and I think that advisors get mired in the fact that this is like there's so much complexity, and it might scare them away. So where would someone start? I guess is I'm asking you, Kevin. Things to think about.
So that's a very good question, and that persistent belief that there is perhaps an overbearing level of complexity is one that I hope to overcome in the next handful of years. And it seems like we've been effective, people like you, Devin, hopefully myself to some degree, at chipping away at that perception. The use of options in the RIA universe continues to grow, and the industry expects that will be a meaningful driver for growth in coming years. And so where to begin is kind of like when you're looking to make any change in life, that kind of first step, as cliche as it is often the most difficult. I would take a second to sort of plug my home team, and SIBO does offer a whole bunch of helpful educational material that may be, and it's free, that may lay a solid foundation as far as your knowledge is concerned. I also understand, I'm sympathetic to the fact that an advisor has an especially difficult situation here, because not only do they have to become at least functionally conversant with the lingo inherent to this industry, and I would argue as an aside that every industry has some lingo endemic to it. We tend to be pack animals, and so using words that are kind of like an inherent wink and a nod to, I know what you're talking about when you sort of quote unquote go out for beers or around the water cooler, that's normal. You have them in the advisory world, you have them in the derivative world, you have them in the medical world, legal world, construction world. Every industry has them. Now, when not only do you need to understand at least the basics of that terminology, but you need to be able to convey what they mean to a client in terms that they understand. And there are countless kind of potential opportunities for breakdown in communication there. So it's difficult, but like so many other difficult things in life, it can be incredibly rewarding when you get to that point. And I think often the impetus is, what's the proper way to put this, from the bottom up, and that we see clients are asking advisors, what tools do you have in your proverbial tool shed that can help me sort of insulate against a potential adverse outcome or define outcomes over a given time frame, rather than necessarily advisors coming to this more organically. While I think both of that goes on, for the most part, I think it's the clients drive the growth there, and I expect that'll be the case.
Yeah, and we're seeing more of that. I mean, this isn't a selfless commercial, but I know you and Devin are both familiar with the quant study that OIC commissioned. That was the Cerulli study. And in prior studies that I did, there was more response from the advisor community saying that clients were driving the conversation, that clients were, again, opening these self-directed accounts and were familiar with beneficial strategies and such. And, again, you talk about the vernacular and the lingo, Kevin, which is really important because, one of the other things, and I think a pitfall for a lot of advisors is like misconception, because they think of options, derivatives, these complex, like really extreme, risky, speculative instruments, and you have to be an MIT quant trading guy, to utilize them, which we all know is not true. I mean, there are surely practical implementations. You can benefit by using options in an asset allocation model, and obviously for income and hedging, we'll get to that a little bit. But I mean, and all kidding aside, going back to this basketball theme, I wish I had exercised my Badgers, in my NCAA pool bracket and bought a call option on the Oregon Ducks. But if Coach Guard, if you're listening, I'm only kidding. I really did take you guys all the way through. So I am a loyal Badger. But I'm going to turn to Devin here and ask, look, we're 46 years into when the first, call traded in Chicago at Kevin's Exchange, which back then was the CBOE in 73. And, we've obviously come a long way. This is a shout out for, my clearing firm, the OCC, because we cleared, 5.1 billion contracts, which was a record in 2018. But I guess I'm going to ask you, Devin, you were formerly a TDA, you worked with RIAs, and there was, I believe, a reception from the individual investor, the retail client, about using options. And then this sort of over time spilled into the RIA channel where it, presumably helped drive revenue at TD Ameritrade. So I guess a couple of questions, Evan, to you is, maybe why were these objections to embracing another part of the RIA? And the second part is that, with IWI, many Coffee with Cott compadres who are listening might have the SEMA and CPWA accreditation. So with these designations, they might be familiar that your organization, has a little bit of options content in, I believe, the CPWA program, but you all launched a innovative flavor, to the mix of the IWI program, and it certainly blends into this discussion, on where to start for advisors. So maybe you could share some insight on this, new course title and, reasons why IWI launched it and added it, I guess, to the IWI menu.
Yeah, good. Yeah, there's a lot in that question, so I'll just kind of back up a little bit. But yeah, that was my observation, was that a lot of the adoption from FAs into the option space was really driven by clients, and maybe not even clients explicitly asking them to use derivatives or options, but asking them for things like, hey, I want to speculate on this particular, get exposure to this particular, piece in the market that I feel strongly about, or I want to enhance a portfolio strategy that I'm already doing, just as a complement to an individual stock trade or an asset allocation type decision that I'm making. And I think probably the biggest barrier that I saw for FAs to adopt it was really just kind of overcoming some of the misperceptions that were out there, right? So some FAs would say, well, I don't want to be in front of my desk trading options all the time and managing an inventory of options and risk at all times and things like that. So they thought that by adopting option strategies, you almost kind of had to become that day trader, that MIT quant, whatever you guys were talking about earlier. I just think that was a misperception. And so the people that started adopting it were really folks that did it very simply. Say, look, I already have a strategy, a portfolio strategy that I'm using, let's say for individual stocks or for a portfolio of stocks. I'm just going to start using options as a complement to those strategies I'm already using. So how do I do that? How do I do it better? So that's where we started creating some of that content to help kind of educate people on how to complement strategies they were already doing and maybe enhance them by either, providing leverage or, as you mentioned, income or a hedging strategy and so forth. And it seemed to make a lot of sense in the context of the portfolios that they were already constructing. And then as they sort of started to gain some confidence with, some very basic strategies, some of them went into more of the sophisticated strategies, getting exposure to different types of markets and so forth, and really added a lot of value for their clients. So they'd come back and just ask more and more questions. Okay, how do I do this? How do I do this more efficiently? How do I, offset some of the risk that I'm taking here, and maybe how do I increase the risk that I'm taking here and so forth? So it really kind of opened up a whole new discussion for those FAs. And then what we found was that those people that adopted these strategies gained a lot more confidence over time, started taking on a little bit more complex type things, but they were adding so much value to their clients that they started to see their businesses grow as a result of that. And you mentioned that study from Cerulli earlier, and that was actually confirmed in the study that advisors that do use derivatives and options actually end up having higher client satisfaction numbers, higher assets under management, and a few other metrics that really stood out. So people sort of had to overcome that confidence issue initially, and then we took it from. Fortunately, there's a high level of support that's out there. There is actually a lot of education that's out there. There are a lot of experts that are willing to share. Kevin himself, going to that educator type role. There's a lot of resources out there for folks that maybe don't have that background, but it's not that big of a step to gain that background. So that was the biggest kind of takeaway for me. Then to go into your second part of the question, that was really why we introduced some of the options education here at the Institute. It's very relevant to our SEMA and CPWA credentials. SEMA is really more kind of the portfolio construction, the fairly more technical investment management type credential. So it completely makes sense in that context. The CPWA is really more of kind of the holistic wealth management type credential, typically for the high net worth or ultra high net worth type client. And that typically comes into play when their clients have maybe more sophisticated needs in terms of hedging. Some of their high net worth clients maybe own businesses, for instance, and have large concentrated positions in their portfolios based on their businesses. And so using options makes tons of sense in terms of offsetting some of that risk from some of their concentrated portfolios and so forth. So there's real relevant practical ways to apply these strategies with clients that they deal with every single day. So did I answer your question okay?
You did, and I know that it was subliminally that I kind of teed you up for that, because full disclosure that we were very grateful at OIC to collaborate with the IWI when they were formerly EMCA, but now with IWI Investment Wealth Institute, to launch this Option Strategies for Advisors certificate program. And so it was a little self-serving commercial for me to ask you about that on here, but I think it ties in so eloquently, Devin, in terms of you mentioning this, that there are confidence hurdles to overcome, that the misconceptions and such about it being complex, value to the client. I appreciate you mentioning again the Cerulli, because I really do believe that we lifted the hood with that study to sort of get the DNA of what option using advisors were, and the ones who might not be doing it frequently or on a systematic asset allocation basis, or ones that are reintroducing it. And so, you really covered, a lot in that. And I know I threw out a couple of, a sort of multi-layered question there, and I'll sort of bring it back to Kevin, and we talk about complexity and such, and, there are a lot of, again, there's a lot of terminology. You talked about lingo, Kevin, and, some of the things that I think might deter advisors, getting started, there's this whole idea that, how important is technical analysis? If advisors are looking at doing this on their own, looking at different strategies, there might be many advisors who are listening that implement strategies that say only go out 1 or 2, 3 months out. They're not looking at leaps. They're kind of typically short-term strategies. And I guess asking you, Kevin, the importance or thinking about volume with the underlying, tying in historical and implied vol, not making it too complicated. But one of the other components of this question too, Kevin, is, would you recommend that advisors do sort of this practice mock, I wouldn't call it paper trading, but it's kind of a way, and I know a lot of firms offer this, as an option, no pun intended, but a lot of firms offer this to their advisors as a way to kind of like try a strategy before committing real money. So, your thoughts, Kevin, on that?
So I do generally think that that's a good idea. The caveat there is that by and large, people act differently in a pseudo environment than in the real world. And so it might not be an ideal mock-up, but I think analogies are often helpful. And when Devin was talking or this conversation thus far, I've thought about things that, have impacted my life, or there may be an analogy there. And I think golf is one that may resonate with some advisors, right? Like advisors are incentivized to grow their business, grow their practice. And in some ways they're out there, like they may be courting business, doing things like playing golf or doing social things, right? And golf can be incredibly frustrating or rewarding. It's not easy, but it's something where people learn little tricks to become better off the tee or around the green or what have you. And in golf, people will often go to the range before they go out and play live. And so there can be benefit from that, but you won't really know how you are until you're out on the course or until you actually put on an option trade and watch it work. Your point on the timing, that becomes a trade-off between like the scalability. So if you are trading very short dated options, you're going to have to dedicate a more meaningful slice of time to looking after the option side of your business than if you are using longer dated options, which I think a lot of practitioners have embraced, where it would be like let's evaluate this toward the end of the year. We look at, and there are so many option series now where you could go out on quarterlies and you could say, I'm going to use a Q2 option or an option that'll expire if we trade on December 31st of this year, and just sort of set it and forget it, like slow cooker type of approaches rather than the microwave. So backing into how much time you are going to need to introduce this to your practice, and ideally doing so very slowly at first, I think stands to benefit the entire ecosystem over the long haul. Look out using longer dated options that don't require a whole lot of babysitting. See how that works, actually do it, and then come back and revisit like the potential benefit associated with that.
And Devin, did you want to add anything to that, relative to this sort of practice mock trading idea that, and I think, yeah, go ahead.
Yeah, Kevin was right on with it. It's going to help you with a lot of things, but not all the things. So I think paper trading from a technical perspective is critical. You need to be able to put on trades and see how the option prices, move and are sensitive to underlying prices and things like that. You really need to understand how all of your Greeks react to certain underlying changes in the market and so forth. All of that's really like understanding the technical aspects of how each trade works. And paper trading, I think, does that really well. But as he pointed out, it doesn't address the more behavioral issues with using options, where you're just not sure what reactions you yourself are going to have to underlying changes in the market, and you can only really get that when you're using real money or using your client's money and stuff like that. So I would definitely argue that Kevin was right on there. And then like I said, I think you pointed out earlier that FAs need to go through a process of saying, look, what objectives do I want by introducing options into my practice? Do I want to sit on a computer and babysit an options inventory? Probably not. So for FAs, it's probably going to be kind of your more longer dated options. You can maybe use some technical analysis to at least guide some decision making, like strike selection and other things like that. But for the most part, the options will probably end up being somewhat secondary to the bigger portfolio decisions that they're making day to day.
It's a great point, and I think again, it's not for every client, it's not for every situation. And I might also steal that analogy with golf, because I'm asking both you guys, not being a golfer but living in Florida, why do I feel so great when I'm on the driving range and I could hit the ball like, 175 yards? I get on the course and I, hit off the tee and I hit someone in the head, or it goes into the water or anything else. So, I guess the analogy of being at the driving range is like mock trading, where your emotions don't come into it because it's not your real money. When you're on the driving range, you're not out on the course. But when people are playing with you and other people are waiting to get up to the tee and the stress level increases, thus the what happens when you're using real money and you have to worry about assignment risk and other things like that. So all good points, gentlemen. And I guess, we talked about sort of this mock trading and getting comfortable. Another thing I hear a lot about, and this is not a endorsement or subliminal commercial for an upcoming podcast on the CWC channel, which is going to be about technology and software. But, one of the obstacles, and that kind of came out from the Cerulli study too, is, solutions for advisors to keep, a record or tracking their activity. And, I guess looking for maybe some suggestions. I'll start with you, Kevin. Beyond the Excel spreadsheet, is there – that we know there's sort of a hindrance or an obstacle that, it makes advisors stay away, because you touched on, I think, Kevin, a little bit, implementing strategies across multiple accounts on behalf of their client base. So, would you agree with that is something you hear in the field, that, because it's something that might be it might take a little bit more work in that idea of how you're keeping tabs on it?
So I would agree that that's something you hear in the field. I would also say that by and large, that's a defense mechanism for somebody that likely doesn't want to embrace options inherently. It's like we'll find reasons not to vacuum the basement or clean a bathroom, right? And I also know from being in the field when I'm at events that cater to RIAs and the advisory space, that there are typically huge spaces dedicated to technology that solves these specific problems. Because if people, and you hear that more than once, the industry evolves, there's opportunity there, and there have been tools in place that you're able to manage this across different brokerage firms and allocate out. And I can assure advisors that are on the fence or that are finding excuses not to potentially take that first step, that is not a legitimate one, because there are plenty of fixes in place that make it as easy as possible.
You know, it's interesting because I like the fact that you touched upon that, because I think there is this reticence at times, and I think that's why this is so timely for the three of us to be talking about maybe restarting or starting, because we have a lot of advisors that are, you know, kind of mature in their careers and maybe have had a uncomfortable experience. I mean, I'm raising my virtual hand here because I do remember in my early days at Mother Merrill and forgetting about American style and early assignment, and I'll step to the plate. You guys have heard me talk about this during my presentations, and being out of the office and my client being assigned early, and my mind thinking that that didn't happen until expiration date, and having a rude awakening, and then having to think twice about it. But I'm glad you said that, Kevin. That advisors tend to look for an excuse, and there is a lot more on the technology side. There's a lot more on the sub-advisor side. I think, Devin, you talked about this. I want to bring you back into this discussion, about maybe some of the hesitant reactions that come from advisors because they're looking for any excuse. We always say that it is, as you touched upon, both you guys said, look, it's you want to feel comfortable with it, and I guess there's sort of this intimidation that options, you need to be very comfortable discussing it. But then it comes back to the idea of maybe advisors are looking at this in too big a scale with too many different strategies, rather than maybe focusing on just an income side of it or a hedging side. So, Devin, I throw that out to you.
Yeah, I don't hate to bring back that golfing metaphor again.
Oh, my handicap. Oh, boy. It's a handicap for me to play golf. That's what it is. But go ahead.
Well, but when you think about it, golfers, there are different strategies that you use. Whether you're hitting off the tee or you're in the fairway or on the green, right? So you've got to be somewhat competent with a few different strategies. And so I've often related, some option strategies with your golf swing, right? Like just buying straight up calls is probably equivalent to using your driver off the tee, right? You can get a lot of distance, you can use a lot of leverage on it, but if you're like me, you've got a lot of risk of shooting it into the trees, right? If things don't go exactly well. So if you want to have a little bit more control over your strategy, maybe you introduce some spread options, which would be where I would maybe equate to using your irons. You have a little bit more control over the outcome of the strategy, but you're giving up a little bit of distance by using a spread or a hedging strategy. And when you're on the green and you're using your putter, you have to be as precise as possible, and maybe there's some option strategies that you're looking for absolute precision in terms of your exposure. So having maybe 2 or 3 or 4 strategies that you can use and use really well, depending on the scenario that you're trying to get out of it, is a pretty good way to have a pretty good overall game, if that makes sense. But that doesn't mean that you need to have 1,000 strategies. You don't have 1,000 clubs in your bag, right? You have 14 or less. So if you become comfortable with a few of those and understand when to use the club and what the limitations of that club are, then you set yourself up for more success. Does that make sense?
Well, it does, because I'm thinking that you and Kevin might have a option overlay Golf 101 book that could be coming out fairly soon, because I want to be just I guess I want to be a contributor to it, because you both have teed me up, no pun intended, to sort of another question to ask, and Devin, absolutely spot on, and I really do like that comparison between clubs and such when you're using strategies, because it's sticking to a plan. You're focusing on the best client situations. I mean, you're, as in a golf game, you're remembering what certain holes were like, you're remembering your stroke, and you're remembering certain things that you might have done in a trade or with a strategy that the outcome wasn't exactly what you wanted. So now you're taking some of those prior experiences. That's maybe also touching upon looking at historical vol and implied and such, and putting all that together, but being proactive. And so with that, I recall, I guess, earlier days in sort of in my bond days when I was taking the Series 7, and I was told by a lot of people in the business, especially on the option side, you should really go out and get certain books that are going to help you along the way. And clearly the OIC is sort of this this go-to one-stop shop for all things options education. Obviously the SIBO as well, other exchanges, IWI, et cetera. But maybe to ask you, because we're talking about a potential book that both you guys will write, but I'll start with Kevin as far as suggestions to maybe any of our listeners if they were to add to their list. I mean, we have, John DeJarian was just on last month, and I know that John and Pete have a book, and Larry McMillan and Shelley Nattenberg's that Bible that's out there, Dan Passarilli. Is there anything that's on your shelf, Kevin, that might be something that our listeners, our coffee compadres would want to think about?
So I had no idea that this golf analogy would have so much caffeine. And now we're penciling in to write a book with that analogy, which I haven't committed to, but it does sound like a good idea. Now you mentioned the Bible, and just I would caution people that if advisors are having any issues getting to sleep at night, they could have that near their bed. It has some oceanic depth to it, and I don't necessarily think that that's the right starting point. It was when it was your intent to do this day in and day out as a business, and this is just an addendum to your business. You don't need to start there. You mentioned people like Macmillan who make some difficult topics very, very tangible. There's probably one thing, so somebody that used to sort of sit in my desk, Brian Overby, has a really simple, and I don't say that in the least derogatory way, options playbook that you can just kind of flip through for the basics, or a reminder of, oh yeah, this is how a spread works, this is how a covered call works, this is how a condor works. And I think those sort of quick references for people where it's not my primary concern when I'm an advisor, but this plays a role in my practice, that stuff can be really helpful, as opposed to the super in-depth thing that might go over well at Wharton or MIT, but is overkill for somebody that is not in need of that.
And that's a good point, Kevin, because I think we have a whole, kind of different scale of listeners that we have with Coffee with Cott, and some that, like to get into the weeds and maybe want to get a little bit more into the quant side of it. And then we have those that you're absolutely right. I mean, Brian's book, that playbook, does a really wonderful job graphically of explaining things, and it kind of, goes back to the original conversation we had at the start of this podcast, about kind of having a game plan, and I think that's how we designed it that way. So it does provide some tactical ways to kind of understand things. And Devin, any thoughts? I don't know if there's anything sitting on the shelves.
Yeah.
You have all those accreditations, so I don't know if there's something that.
Well, for me personally, my journey started kind of maybe the same way as yours. Taking my Series 7 exam was my first experience with understanding what a call was, what a put was. Definitely learned a lot more as I was going through my own credentialing when I went through the CFA program. I mean, it's put your helmet on. You're going to really understand what those derivatives do and are from an academic, maybe theoretical, hypothetical type perspective. From a practical perspective, I read all those books too. Larry McMillan, I think, was probably the one that stood out to me in terms of understanding from a practical perspective what those strategies do and what they are. I was actually pretty fortunate to have a little bit of a mentoring situation. So when I was working with TD Ameritrade for many years, I got a chance to work closely with Tom Sosnoff and Tony Batista. Those guys were with the Thinkorswim program for a long time, so I got to see kind of a lot of execution-type discussions going on, and that kind of opened up my eyes quite a bit. And then I would say really just incorporating it into my own investing was a big part of understanding the real mechanics behind it. So that was maybe more of the little journey that I had.
That's an excellent journey, and I'm fortunate enough to have one of Tom's berets. I have one of those Tasty Trade hats. I'm a big fan of him and Tony as well, and I know they're out there as well, kind of preaching the gospel. And I think both of you kind of touched on different resources. And again, I'll go back and say to those that are our listeners that again the OIC does have a plethora and a wealth of knowledge and resources that you can leverage as you continue this journey, that we're talking about in terms of either, starting or restarting. So, gentlemen, I think we're kind of getting towards the end here. And one of the things I always like to ask my guests, and this is really for the listeners' benefit, sort of two things that I like to ask my guests. And, one is if you weren't in this educational outreach and the investment side, what do you think you might be doing today? And then the second part to that question is, what is your favorite brew when you're sipping that cup of joe? So I'm going to start with Devin, since I believe he is bilingual. Voi como está, Devin? I think that's Portuguese. I don't know if it is. If I messed it up, then I'm embarrassed. But I tried to say, let me start with Devin in Portuguese. So I'm going to turn it to you, Devin, because maybe you might be teaching overseas, but I don't want to. I don't know. So I'm asking you for our listeners those two questions.
All right, obrigado, Eric. That's really good.
There we go. Thank you.
Very good. So, so the first, what was your first question again?
The first question is about if you weren't in the educational space.
What would I be doing?
Yeah.
Well, actually, if I weren't in the investment space, I actually would be in the education space. My dad was a school teacher for almost 40 years, and I really admired him in terms of what he was doing and accomplishing. I wouldn't be able to live off of a teacher's salary, but I really respected a lot of, for what he did over a 40-year period of time. So it was actually on purpose for me to choose a career that had the investment management background, which was really, where I started out, but then also to incorporate the education pieces of it too. So I actually consider myself really lucky that I can merge those two, these types of professions or positions that are in a meaningful way or are really hard to come by in terms of the education and investment background. So I'm going to cop out and just say I would be probably an educator if I wasn't in the investment industry.
And your favorite coffee?
My favorite coffee, I'm actually kind of I'm not very picky, actually. I mean, I just I get a medium roast at Starbucks, and I'm good with cream and sugar. That's it.
That's a true educational answer to it, and I like that a lot. And full disclosure to my listeners, my dad being on the investment side, my mom being a teacher, my daughter's a teacher now, so I not only feel blessed to be on that part, of the stage, so to speak, sharing the wisdom and getting to work with people, Devin, like you and Kevin. And then so I'll now turn it over to Kevin to ask him if he weren't in the position he's in now at SIBO, and I don't know if he would have maybe followed in the footsteps of a colleague of his that was at the Institute, Peter Lusk. I don't know, Kevin, if you were a rock guitarist in a cover band in your prior life or whatever, but I'll ask you what might be your if you weren't doing this, what might be the position you're in and your favorite coffee?
So questions like that are so fascinating and difficult, and the answer would probably change if you caught me at different points, obviously, in my life. But I will tell you that I stumbled into this industry many years ago, ironically, in some function as it relates to golf. So I did grow up caddying, and I worked at a club outside of Chicago. And one of the things that I noticed about the membership and the people that they would bring around was that many of them were in some way affiliated with the trading community here in Chicago. And I'm going to plug one of the best organizations in the world, Western Golf Association, the WGA. They put kids that do well in high school, caddy, and have some leadership qualities on a full ride through a whole bunch of colleges as a result of their kind of being affiliated with the game of golf. I am forever indebted to them. And one of the people that played a big role in that organization was this guy, Lee Tenzer, who happened to own his name was Lee E. Tenzer. He owned Letco, L-E-T, company trading. And my intent when I finished college was to go to law school. I took the LSAT. I did reasonably well on that. And I would probably, my long-winded way of plugging WGA and saying what I might be doing is I would probably be a miserable lawyer. I think that was probably a cop-out in that, generally speaking, school came relatively easy to me and that I would continue on in school, but I don't think that that was a calling. I stumbled into this at a very interesting time, the late 90s, and I think the time frame that you're introduced to anything, whether it's a great book or a movie or an industry, plays a role. It colors your perspective. And so I saw the very tail end of the NASDAQ boom and then the downside of that. So that sort of bear market was my entree into this business. It still colors my perspective. I have now seen 9/11 and 2008, and I'm dating myself, but I am better for that wear. And so I have seen the evolution of this business from very much a niche industry to one where we're talking about 5 billion options cleared last year, and this is not just for the very well-heeled or the very well-educated. Options are something that a wide swath of the population already embraces. And so I am glad I am not a potentially miserable attorney. There are far too many of those. And to your last question, I'm going to plug a Chicago roaster. I love Passion House Coffee. They have a website where they sell some experimental brews.
Wow.
There's been a revolution in coffee, like here in Chicago, Metropolis and Intelligentsia have come a long way. I'm going to plug Passion House Roasters.
Well, I am going to have to try that next time I'm there. That's really cool that you're recommending. That's a nice offer. And disclosure to our listeners, I also at one point almost walked down the route of becoming a lawyer, having worked in the corporate law side and the public law side. My 15 minutes of fame was making Xerox copies for John Jr. when I was down in the Rackets Bureau of the New York District Attorney. But I am also forever grateful to have gone the route of finance and now being very lucky to be at the OCC, now celebrating 10 years. That a lot of my listeners have heard me say that before. And so, gentlemen, I'm going to mention both of your websites if I get this right. It is cboe.org. Is that right, Kevin? Would be the correct URL for your website?
It's .com.
.com, I'm sorry. So cboe.com,
No,
and then Devin, iwi.org.
That would work, or investmentsinwealth.org.
Or investmentsinwealth.org. And again, we're mentioning the Option Strategy for Advisors certificate program that it had been launched the beginning of this year. So we encourage our listeners to take a look at that. I also encourage our listeners to send in any ideas, any suggestions they would like to hear on future podcasts. They can do that at options@theocc.com. Again, that's options@theocc.com. And we like to end with a acronym of coffee. So C, consider using. O, option strategies. F, for your clients. F, find various. E, educational resources. E, easily at optionseducation.org. So I want to thank my two guests. They're great colleagues, great friends, and thank you all for listening.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.